market and plays. And then we're going to go deep into one specific stock that I believe has extreme potential. This is a stock that I believe is going to be a key resource play, is going to be very, very relevant in the build out of AI in the United States. And arguably, it's going to be one that is very, very important for national security. This is a stock that we've talked about before and one that has started to run up, but I believe it has way more upside, and I'm going to present my case for it. I'm going to present the facts, the data, the evidence, and I'm going to let you be the judge. Of course, as always, you got to make sure that you're doing your own due diligence on all ideas presented. If you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Lots of people get real risky without doing their frisky, and vice versa. Okay, so to start, you have to understand that right now we're heading into a global AI arms race. If you look at this chart from Bridgewater, it shows almost 40% of the US real GDP growth last quarter was driven by tech CapEx, capital expenditure, aka investment to build out AI and everything that goes into chips, data centers, software, the overall apparatus. If you look at the trend of hyperscaler CapEx between just the richest companies in the world, Amazon Web Services, Microsoft, Google, Meta, Oracle, well, this CapEx is shooting up like crazy, and it's expected to go up many, many multiples more if you look at the company's planned investment trajectory. And if you look at the total expected investment in AI by 2030, well, by most analysts' expectations, you're looking at many, many trillions of dollars. Now, if you're financially minded, you might ask yourself, okay, well, wait a second, doesn't this AI investment have to pay off eventually, or you're going to see some sort of bubble popping? If the AI investment isn't paying off, well, companies that have invested way too much, way too fast, are going to see their valuations collapse, right? Certainly on an individual case-by-case basis, these questions do matter, and market cycles will happen. Downtrends will happen. However, if you're focusing and obsessing over these questions, you might just be missing the forest for the trees. Here are the trees, what people think matters. The companies and how much money they are going to make from AI. That's a small part of it. That's just the trees of an overall forest. What actually matters, the forest, the country with the best AI is going to be the most powerful economically, militarily, and technologically. So in other words, this is actually not just a small, simple battle between companies to see who's going to make the most money over the long run. It's actually which country is going to develop the best AI and is going to become the next superpower, the top dog of the 21st century. Whichever country wins the AI arms race is going to be the number one in terms of economy, military, technology, living standards, is going to be able to rewrite the culture of the world. This is what we saw with the United States the last 100 years and on, and whoever wins this AI arms race is going to be the next to have the torch on that. And really, this is a race between the United States and its allies and China and its close allies. Now, I like to be an optimist and be pacifistic and say that, hey, maybe we're all going to be friends, kumbaya. But history suggests other things, and if you really look at history, it suggests that the only ways that people can be friends is with mutual competitiveness. But this AI arms race has the potential to completely derail the entire world order. Now, you might think, wait, Charlie, what does this have to do with anything? I'm just here to make some money, Charlie. This national security threat means that AI investment is not just going to be tied to profits. It's going to be increasingly bankrolled and backed and protected by the US government. And because the private sector knows this and they know Uncle Sam's going to be behind their rear end every time they fall, well, it emboldens them even more to invest. And we're not even talking about the lowering of the interest rates by the Fed, which is going to cause even more investment. The folks that are saying that AI investment within the United States is going to stop, well, they must also believe that the United States is going to be willing to bow down to China, which again is not the reality of what we're already seeing, let alone what we're going to see in 5 to 10 years. So here are the early phases of the AI arms race. Now, pay attention very, very closely because almost all of these are already happening. Phase 1, recognition. Global leaders realize AI is the new arms race. Dominance in artificial intelligence is seen as critical to national security and economic power. Phase 2, the investment surge. Massive private sector spending begins, led by US tech giants and Chinese state-backed firms, racing to build compute infrastructure and train frontier models. Phase 3, government intervention. As capital expenditure CapEx needs outgrow corporate balance sheets, governments step in. The US and China begin directly funding AI infrastructure, chips, data centers, energy security. AI funding becomes the modern equivalent of the Cold War space race. Phase 4, currency impact. To fund this new wave of national spending, both sides expand their money supply, aka print money, effectively debasing their own currencies. Phase 5, the asset response. So investors hedge against debasement, leading to rallies in gold, silver, Bitcoin, and other stores of value. Productive asset owners, owners of shares in AI and AI-related stocks, see massive, massive wealth accumulation, while regular folks see their purchasing power eroded, and many will even lose their jobs entirely. Okay, so in order to have have the best AI as a country. What areas does your private and public sector have to invest in? Well, energy, rare earths, chips, data centers, software. These are areas that I believe very, very strongly are going to be backstopped long-term by the federal government, by the Fed with low interest rates, and by the private sector that wants to make money piggybacking off Uncle Sam. Of course, if you're buying AI stocks that draw AI doodles, maybe that's not going to be super important for national security. But the ones that do fall into these categories, of which there are many, well, those are going to be very, very important in the long term. So anyways, in no way, shape, or form am I saying you're never going to have a crash again, you're never going to have a market cycle dip, you're never going to have any of these things. You're going to have them. They're going to be even more extreme than ever because of massive amounts of margin. But what I'm saying is that you need to be calm, collected, look at the bigger picture, look at dips as huge dip buying opportunities, look at these rips, these higher and higher highs as opportunities as well, and buy slowly over time good.
Okay, I don't know what to do with this information, but I'm stoked and hyped up for sure. For sure. Today is Wednesday, October 15th. Yesterday was Tuesday. And yesterday we talked about a few stocks, namely, oh boy, namely what? I think one of them was a national security stock, an AI security. Oh yeah, Archer. And then another one was, oh dear, what was it? Power electronics stocks, maybe MSC again. I say again because I talked about it on here. And then the third one was low-priced NVIDIA connected stock. What was that? $3 stock. Boy. They just kind of escape me. Gosh. Oh, LiDAR stock. LIDR. Yeah. Makes sense. NVIDIA autonomous driving. Okay. So today is Wednesday. And I think this stock is interesting right now. QURE. So let's hop into a little breakdown. I can see comments on YouTube. You can get those in. And we'll get hyped up again in just a moment, but never hurts to start a little breakdown here. So, a lot of information about this biotech stock. My gosh. Sort of leveling off. 5-year, it's absolutely rocketed. I don't think this is, actually this is relevant, my gosh. Okay, so this is relevant. $75. Okay. There we go. Unicure. This is the market today. So, Bitcoin still looks gnarly. Ethereum looks okay. Well, not really. All right, jumping to breakdown. I can see comments as I mentioned, but focusing here right now. Cool. There is one stock that is about to break out, in my opinion. It is a biotech stock. Biotech is a less exciting industry to invest in as a medium-term investor because trial data can come out and these companies can be unpredictable unless you are an expert in pharma. But they happen to be looking the strongest right now. The market doesn't look very strong. Bitcoin looks terrible after that mini flash crash. Ethereum also not looking great. So this is the industry that's holding up. Drugs, and this is not just any drug. This company had serious results on the way to a cure for Huntington's disease. The ticker is QURE, Unicure. Let's get into a little breakdown on this stock.
This is Sam Putnam.
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 So here's the chart. This is the result, which obviously was very well received by the investing public, starting with people in the know, biotech investors. Company tripled. This actually happens more often than in other industries because these are basically 0 or 1 companies. They can either sell hundreds of millions to billions of dollars worth of a drug, or the science is not proven out and they just have to give back their cash if there's any left. What's interesting right now is the SPY doesn't look great, okay? And NVIDIA, the leader, doesn't look great either. Now, there are some glimmers of hope. AMD is up today. Google is doing okay as well. So, not everything is as bad as Palantir, NVIDIA. Netflix not doing great. Palantir actually looks okay. Not really investable, but at least it's building out a base. But don't want to get too distracted here. Bitcoin looks terrible. Ethereum doesn't look great either. Actually, it looks very bad. It kind of looked like Ethereum was going to be stronger than Bitcoin, but nope. Rolling over as well. So here we are in biotech. XBI is an ETF. Biotech ETF. Showing how well this is doing. And there are some companies setting up well in biotech as well. And namely this ALNY. And RYTM already sort of went. So this seems to be the place to be right now. I can't tell you definitively why that is, why it's a flight to quality. And I do mean it when I say you have to be careful investing in these. And there are some companies that have just gone down, down, down. IOVA as an example of a penny stock, biotech stock. IMRC, is that the one? IMCR also not doing well. I mean, going nowhere while the market went up since April at least. So you don't want to be into HIMS. You don't want to get caught in any gap downs, but they can happen here. So how do you manage risk? Well, you just don't put as much of your portfolio in this company. Because if this can go down 40%, like it just went up 300%, you can get your investment chopped in almost half. You could. This is the bear case here. Obviously, I wouldn't be talking about it if I wasn't thinking it was interesting. And it's interesting because, it's a higher low over this level here. Today was a green day. Last few weeks, it's been going sideways. Last week it's been going sideways. So you risk a couple dollars, you try to make 10 and then 20 on maybe your second half of your shares. Maybe you sell out half after it goes up $10. But if we zoom out, you know, it's only after 5 years ago that we start to get to blue sky levels. So it's definitely possible. It's kind of close to $80 right now. So this is back in the crazy, it's actually before the COVID euphoria. So that's definitely going to be visible. This is the highest volume since then. So that's also relevant, just showing how important this result seems to be. Now, there's also a lot of volume here, so I can't really say that this is that important in the last month. But what I can say is that you don't have to be a biotech expert to know this is a big deal for this company just by looking at the chart. Gene therapy is a hot sector. CRISPR as well has had some moves recently. Not a great investment right now, but this thing is setting up. And a similar ticker to QURE is this CLPT. So there's a number of tickers that are similar, but in terms of those that actually move like QURE, it has to be CLPT. This is the connection. ClearPoint Neuro is the company. And basically, Cure's gene therapy candidate requires direct brain delivery using this neuronavigation technology. So it sounds like basically brain surgery. And if they're required, if this ClearPoint device is going to be chosen by uniQure, if their gene therapy candidate for Huntington's succeeds, then ClearPoint's going to go up. So they are kind of moving hand in hand. This was September 24th. This was September 24th. So here's also in comparison on October 2nd. This was a move up on ClearPoint. And then on October 2nd, they don't exactly move the same. QURE just sort of went sideways. So all you can really say definitively with these two is you want to be watching this one as well. And if it does totally trail off, then you probably want to be pretty cautious with this QURE. So it's kind of like a double investment here. So if you double support, if you will. So if you buy here and you risk, you know, somewhere in here, all this volume, you also want to take a look at here, definitely not risking lower than here. So you're not really risking $3 a share because you're not buying CLPT, but you do want to watch it. So that's how you sort of buy the good one, but look at the follower. So that's kind of what's going on here. And if that sounds sort of like inside baseball, it's not really. It's not like I know exactly, not like I knew about these companies until, well, first of all, until this one started moving, right? People got excited about buying this right away. Sometimes you can get in early on these biotechs and they do just chug up and up and up. And sometimes, you know, they don't really behave like that, where you can't just buy the first day and then risk it and then have it keep going back up. Sometimes you have to sort of wait for that first day to close to then sort of establish a level which you can see it actually was kind of ugly. It came down and then came back up. So it's kind of established a level now, so it's getting interesting again. And again, these two are related, but you don't have to be an expert to hear that. This is sort of, if you look up QURE on X, you're going to see CLPT being talked about as well. So it's the same thing as like NVIDIA moving up with, well, this is not a great example because AMD is doing so well after that OpenAI investment, but a better example is like RGTI moving up and QBTS moving up. They're both in the quantum sector. They look pretty similar chart-wise. So that's the company, that's the sympathy. And if you like these ideas, hit that like button. If you haven't hit that subscribe, you want to get notified of future ideas, hit that subscribe. And if you want to talk stocks, head over to stockscommunity.com. You can join for $25 and you'll see a couple testimonies of people who have been tuning in for the last couple months at this point. I'll see you in the next one. This is not financial advice.
This is Sam Putnam.
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 So let's check back in on Charlie.
Stocks, good assets at good prices. And I'm going to be fired up to give you as many quality ideas as I possibly can with the research to boot so that you're not just randomly buying stuff. You got to have an understanding of what it is and why you're buying everything, and you got to have a plan. Okay, let's go on to the latest on plays. So we got to start with RGTI, our leading quantum idea. So if you go back to when it was in the $8 region and it was in a big dip cycle, we were saying, hey, look, this is a great buy because the quantum space is in its early innings of investment and RGTI is a leader in the space. And as of yesterday, RGTI hit new highs at $57.54, which was very much a beautiful run, and we love beautiful runs. Now, if you look back at that April video and some of the other videos we made back then on RGTI and over the summer, a lot of people said, look, I don't like RGTI because it's in the quantum space, and that's still too early innings. That technology is too much of a fugazi or something like that. The reason that I believe that quantum is something that can't be slept on is specifically because it's next-gen technology. Again, these technologies are not just essential for a company, but also for a country. Whoever has the most powerful chips has the most powerful AI and is the most powerful economy. For example, by many metrics, China is investing way more in quantum than we are here in the United States in both a public and private way. And I believe that more and more dollars are going to flow into quantum in order to at least match that expenditure. And RGTI, as well as a few other plays that we like, are really the top dogs to get that capital. This is a company that we've been yelling about since April, and we will continue to yell about it, and we alerted a new round of calls dating out to 2027 because we do see the longer term, bigger picture on this. Okay, next we got to talk about NVTS, Navitas Semiconductor. So back on July 20th, we broke down the case to buy NVTS stock at $6.79, and the reasoning was because they were backed by NVIDIA, partnered with NVIDIA in several ways. They offer very competitive next-gen chips that are faster, smaller, lighter, and have substantial energy savings compared to competitors and at a much lower overall system cost. And of course, we've covered the stock multiple times, and yesterday it just hit highs at $14.28, which means over a 2x. So massive congratulations to folks who believed in this one. But what is the long-term case for NVTS? Well, with this, you're getting exposure to very key types of chips. This is a stock that ensures exposure to high growth GaN/SiC power markets. Now, if you go over to our calls alerted back on July 21st, we said, quote, Navitas Semiconductor is the clear leader in GaN power ICs, enabling faster charging, higher efficiency, and smaller form factors across EV chargers, and most importantly, data center power supplies and consumer electronics. A strategic partnership with NVIDIA to integrate GaN power stages in next-gen AI APUs, GPUs, underscores the technology's growing importance. So that's why NVTS stock has been on such a rocket recently, and that's why we continue to believe in it over the long term. Okay, let's talk MP Materials. ticker symbol MP. So back 3 months ago, we made a video breaking down why MP Materials, ticker symbol MP, was screaming buy, and that was because it was in consideration for a DoD contract and stake. And then that deal got finalized, and in the DoD deal, MP actually secured a purchase agreement with a floor price of $110 per kilogram for certain rare earth oxides that they offer, which helps insulate their revenue against price swings. The U.S. Department of Defense also committed to become MP's largest shareholder via a $400 million preferred stock investment, and after that, MP got a ton of private attention too, with a massive backing by Apple and a massive deal with them. And so at recent highs, the stock hit $105 a share, which is very, very beautiful. But what is the latest on this setup? Well, this is what we sent out to the Discord today. Quote, MP Materials has long-term backstopping from the federal government and a price floor, and they own the only operating rare earth mine and processing facility in the United States. This stock is overdue for breathing after recent massive runs. Short-term pricing is going to be based around how heated U.S.-China trade war tension is in the geopolitical sphere and throughout the media. However, long-term, we expect much broader price appreciation. And one more before we go on to the main entree. If you are in the Discord, you notice we've started talking about another SPAC player, one specifically called CCCX. Now, the stock is expected to merge with a key quantum company, effectively taking them public. People are buying the SPAC entity in order to get an early buy-in on that quantum stock. We saw a lot of this in 2020 and 2021. We saw this with HOND, which is one of our favorite uranium plays, but this play is in the quantum space. Now, here's what we said on the Discord, and I want you to know about this. CCCX has been following a consistent uptrend as hype around a merger deal keeps building. The merger partner is expected to be Inflection, a quantum computing player, with many details still being finalized. Now, from a technical standpoint, the stock is currently trading within an ascending wedge, which can often act as a deprecating factor. We expect a break below this pattern in the near term. However, the dip will be heavily impacted by the merger outcome. Keep in mind that CCCX is an SPAC with little inherent fundamental value other than the potential company it is merging with. If the deal with Inflection falls through, then we expect to see the bears push CCCX below the $20 level. On the flip side, if favorable details emerge, then a bounce off the $20 to $22 level range is likely. And I really want you to know about this now because I believe you're going to see this talked about everywhere for the next couple of weeks, and especially as we head into the end of the year. Okay, folks, now it's time for the main entree, and that is LAC. So this is a company that fits all the themes we've been discussing, has U.S. government backing, and likely has much farther to go if my anticipations are correct. So the context here, we called this out before the government actually took a stake in it, and it's been featured on our channel a couple of times. And yes, it's gone up since those levels, but I believe there's more upside. I believe this play is just getting started. So what exactly is LAC? So LAC is a lithium development company focused on advancing the Thacker Pass project in northern Nevada, along with other lithium exploration and development assets in North America. Now, Thacker Pass is its flagship asset and the specific one that I believe that Uncle Sam is interested in, and it aspires to become a domestic source of battery-grade lithium carbonate to feed energy storage and related supply chains. Very, very critical segments for data.
Okay, Lithium America already went up. I mean, I think so. So let's take a look at this company, TEM. Let's jump over here. Let's jump in here. That's not relevant. Okay. SoftBank and AstraZeneca. Okay. Open a little breakdown here. I can take a look at YouTube comments. X is okay. YouTube is kind of the place. Tempest AI. Memory stocks are going. Crude oil hanging. The dollar hanging down a little bit. So, what else? Some of those rare earth stocks are cooling off. Okay. Cool. Do a little breakdown here. There is one stock ready to jump up in price. This is a AI stock, healthcare AI stock. They have a $200 million investment from SoftBank. They also have a $200 million royalty agreement with AstraZeneca. Biotechs also are doing well. The biotech ETF looks great. That ticker is XBI. This ticker is TEM, Tempest AI. Let's jump into their recent news, which includes some Stanford-led studies that support their technology. At least one recent one that's from that brand name, and chart looks great. Here we go.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so look, here's why it's interesting. So it's coming back to this level from mid-September and cooling off a little bit. There's been a little bit of cooling off in the market. Things got a little frothy, right? That's the word we like to say sometimes on those Trump Z comments. I really got to pronounce the guy's name wrong. President Xi from China. We're pretty much recovering, at least half of that. So, Trump said everything's okay. Xi said, hey, we're not banning all rare earth export companies' products. We're just going to need to approve them first. And some rare earths are cooling off as well. USAR, UAMY, MP, CRML. So they're cooling off. So that's actually good for the market as a whole, right? Because they go up when there's national security concerns and they're like a flight to quote unquote quality because they symbolize independence from Chinese metals and mining. Now, we're looking at what's going on elsewhere in the market. And if you look at the biotech ETF, not XBIO, that's a little tiny company, penny stock. Don't want anything to do with that right now. XBI looks pretty good, breaking out right now. If we look at AstraZeneca, it's that's not AstraZeneca. What is AstraZeneca? Well, this is Pfizer, and I don't know what AstraZeneca's ticker is, but it honestly doesn't matter that much. This is Novo Nordisk. The point of TEM is it's at an important level. It does have a collaboration with a massive company, and in a similar way to HIMS, that collaboration can make or break a stock. So this is a situation where HIMS got cut in half almost from Novo Nordisk coming out and saying, hey, you know, the way HIMS is representing our Wegovy weight loss drug is not really the way we represent it. So HIMS got cut. HIMS is chugging back incredibly. Here we have another company that is supported by a huge pharma company, AstraZeneca. It's at an important level, and you don't want to buy these when they're just chugging up, right? Because you don't know that this big candle is going to happen. In fact, this came right back down. So you want to buy them when you sort of level the risk off of, which we're sort of seeing over in mid-September. Now, this is the other super important level here, and that's sort of the way to buy it with a super low risk that sort of catches the eye and says, you know, this looks a little choppy. I don't know what to do with this, but if you zoom out, there are people, funds, traders, and I mean like professional traders employed at banks, you know, or family office traders, people investing millions of dollars per stock, right, at a time, to tens of millions or hundreds of millions in the case of the institutions, funds, acting on behalf of pension funds, endowments, blah, blah, blah. There's a lot of money here spread out, distributed, you could call it. So when the price fails here, some of them sell out here, but some of them are still holding. And this is almost to that sort of 6-month mark where there's still a chance that people are still underwater up here. So when the stock gets over that price, they're still making money. But when it comes back down and gets below, sometimes what will happen is they'll sell and cut their position even. You know, they held this whole time and then they sell here when it's like, okay, I thought I was bailed out, but now it looks like I just have to break even. So it's psychology. You've probably done something like that because I know I've done something like that. It actually matters. You can see it in charts again and again. So what matters for us is using that level, 91.5, 91 and change, and buying, you know, risk $1 and try to make 10 with half your position and then another 10, you know, just hold the rest. Use one of these lines. If it sticks above these lines like it was here, you can just hold that. And I'm being a little loosey-goosey just calling these lines, but a lot of people have this line on their chart. It's this one is a 20-day moving average. It's very, very common. It's almost as common as just having the volume on a chart, which is also important. You know, when you see big volume over here, you know, there's a lot of people who bought and sold over here. Every buyer has a seller, but when you do see a big red candle, which none of these are too big, but that means there's a lot of people who sold, and it kind of just means not a lot of people want the stock. There's a lot of supply, overhead supply, so it can be difficult to get back above that level. You see it failed here. Now it finally went up, and now we're trying to stick above this. So that's a whole lot of talk about what is, you know, I would say actually more than half of how a stock moves is based on the psychology of buyers and sellers, but we could debate that endlessly. Now, a lot of people also like to look at what the company does. Go figure. And this company does have some votes of confidence. 510 clearance. This is a medical device clearance, 510K. And they're also allied with some big names, as I mentioned, AstraZeneca and SoftBank, as well as they have some research collaborations with an NYU satellite facility And then the study from an Ivy League school that's great with technology, right? The technology campus showed increased drug delivery to targeted areas. This is, I don't know how exactly related ketamine and ultrasound is to Tempus AI. But I think that's generally mostly what they're doing. These are some other companies doing similar blood-brain barrier transport. This brings me back to bio class. I'm not the bio guy. I'm not the biotech investor. I'm definitely the person looking at the chart and also looking at where momentum is. Momentum is here, and there's enough big names connected to this company that there's going to be eyeballs on it for sure. SoftBank is also responsible for the $500 billion Stargate project that's creating permitting for greenlighting all of these data center build-outs for all the companies providing compute for OpenAI. Northwestern is actually well known for medicine, so that's a green light as well. Everyone's been talking about Alzheimer's disease. Alzheimer's disease is of high interest to retail participants, which is like a euphemism to say, like, when companies put out Alzheimer news, these stocks can absolutely fly. I'm not saying that you have to wait for Alzheimer's news to buy this. I'm not saying that this is even directly related to Alzheimer's. I'm just saying that's important as a piece of information to keep in your back pocket when you're buying or selling these stocks. This is a little bit of just background info that's always good to know. Patent litigation, but generally these type of companies don't live or die based on a lawsuit like this. I could be wrong, but I think if this were more significant, then the stock would have not just moved down like this, it would have just completely cratered. We did recently see an example of that sort of. AppLovin had some sort of class action with their data sharing. They collect data for basically in-app advertising. So, personal data that's typically anonymized. But anyway, so that thing really got cut. Now, it had been going up a lot, but that's just an example of what can happen. So I'm not saying this stock is immune to legal challenges. I'm just saying I don't think that is in the same ballpark as info that could hurt the company. So there are some similar companies, but I'm honestly not really educated on how to deal with these. Edit has been sort of in the public eye because they do gene editing, like it sounds like, and they're in that CRISPR gene editing basket, and these companies have, pretty much doubled in the past few months. So they're tiny companies, but yeah, as long as those remain somewhat strong, I think the general basket of sort of speculative, forward-looking, innovative biotech companies is going to be strong, and Tempus is certainly in that category as well, even though they do the AI, so they're a little bit more related to imaging than, an ultrasound, which is imaging, than what these other companies do, which is actually gene editing itself. So we can look at BFly as well, but I don't think there's anything that interesting here. It's just such a small price stock. So this is the stock. That's a lot of sort of smatterings of information about it. You never really know when something you pick up becomes relevant. Piece of news comes out. This stock moves, it's just helpful to have like a broad vision of what can happen to biotech stocks, because I really can't stress it enough that caution is important. This was a very scarring experience for me. Okay, so could happen to you. Now, those are the levels. Don't put more than 5% of your portfolio in this. And if you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to get the best idea, the stock that I think is ready right now, head over to stockscommunity.com. You can join for $25 for 7 days. You'll see a couple testimonials on there from people who have been definitely using the ideas. And yeah, this is not financial advice. Hope to see you in the next one, though.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, let's check back in with Charlie here.
Data center security and overall military security. Lithium is so important, and it's one of the chokeholds that China has over the US, and so you need to see these develop out a lot. Now, this company, in my opinion, has the wind at its back. For starters, it's got a strategic industrial policy tilt. The US government has now inserted itself into LAC, which, by the way, we brought to you before they actually inserted themselves, and we told you just when it was in the rumor stage. But anyways, they took a stake of about 5% in both the company and the Thacker Pass joint venture. That's not just a loan guarantee, it's actual skin in the game, which aligns with Washington's incentives. Think about this. This means that any adverse regulation, funding clampdown, or permit rollback becomes reputationally costlier for the government, raising the hurdle for political interference in that segment. Now, there's also financing, de-risking, and a lower cost of capital. The DOE loan that they got of $2.26 billion is restructured, and now backed by equity co-participation. That shifts project risk from if you can raise money to can you execute the build, a much more manageable bucket to be in. Private capital will now be way more comfortable tapping in and around this government anchored zone. Nobody loves betting more on companies that have been bankrolled by Uncle Sam than private capital. Now, you've also got just the demand and policy tailwinds that are out of this world. Of course, EVs, but I'm really more concerned about grid, storage, and battery demand. Those are going to keep climbing. The IRA, the Inflation Reduction Act, the Defense Production Act, critical materials mandates, and content rules all favor U.S. supply chains and thus favor this. China's tightening of rare earth / critical mineral exports or restrictions further amplifies the non-China source premium that should be paid to this stock. Now, I would argue here the story with this stock is that you've got asymmetric risk versus reward at the current valuation, given the government's picture in this. On the downside, you have risks of delays, cost overruns, weaker than expected lithium prices, but many of those are mitigated by government backing and advanced engineering. Nobody likes picking winners and losers more than Uncle Sam, and once he's taken a stake, I believe that's a pretty good indication that he thinks you're going to be a winner. And if you're not, well, he's going to try to backstop you all the way to make it as likely as possible. Again, my opinion, I could be wrong, but again, when you're analyzing these trends, you have to point these out because these are very beautiful setups. So anyways, what is the rundown on why we like LAC? Well, because LAC now crosses from a junior development story to a strategic national asset with real government capital aligned. We like it because the execution is not just speculative. If you actually look into their reportings and their SEC filings, they have locked design, EPC partners, union labor, and they've got beautiful public transparency as a publicly traded company. And all of these things are very good. Now, because the global lithium cycle is entering a tight regime, new projects globally are late, permits are slow, and the ESG pushback has been strong. Well, I think that companies that actually have this leg up that they have are going to really perform. And I also think this is due for substantially more multiple expansion because of how the United States, again, is backing this, which means that you're going to see a lot of de-risking of capital. Now, what do we see happening to the stock price? Well, I would like to see, and I always say this because I always mean this, I would like to see the stock breathe. I don't like the idea of chasing. It just feels painful. But at the same time, I do want to remind you of the bigger picture, and that's why I'm also going to be alerting LAC call options for a specific time range. If you'd like to see those, well, first link to join the Discord is right there down below. Anyways, folks, that caps off today's video. Have a great rest of your day, and we'll see you next time.
All right, what else has he got cooking here?
Folks, you better get ready. In today's video, we're going to break down the top 4 stocks with crazy potential in October 2025. Now, one of these stocks is actually backed by Google. Google owns a sizable stake in this company and has a lot of interest in this company succeeding. I'm going to break down the evidence, the data, the receipts, and let you be the judge. We're also going to be doing a beautiful breakdown on the current market condition because a lot of folks are starting to get a lot of worried about what's going on. And before we get into it, as always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. Also, I just want to give a quick shout out. We just hit 800,000 subscribers this morning. And as somebody who's been posting regularly on this channel since 2018, it really means the world to be a part of so many of your stock market journeys. Right now, we are seeing unprecedented viewership, unprecedented positive feedback on comments, emails, direct messages, so on and so forth. And I think the reason for this is because for years we've been laying out very common sense strategies, common sense stocks, showing evidence, showing the receipts, and making the case for things, not trying to have a crystal ball, but making the case. And now in this beautiful bull market, you can see how a lot of that has paid off. I appreciate each and every single one of you. Okay, let's talk market context. So Google searches for AI bubble are trending, and you've had numerous CEOs, founders, financial leaders warning of the ever-storied bubble popping. Now, saying the market is a bubble that's about to pop is kind of like saying I have a car and the car's eventually going to run out of gas. Like, sure, that's great. You're right. You're a genius. But that doesn't tell you when, where, or how far the car is going to go before it runs out of gas, which arguably is just as important as knowing that it's going to run out of gas in the first place. And if you're being real here, I mean, we've been hearing this bubble talk since this bull market even started back in October 2022. In 2023 and 2024, and especially the first quarters of this year, we were filled with endless doom and glooming from all of the big names. And this reminds me of the famous quote, "Bears sound smart, but bulls make you money." If you look at historical data, bull market returns far outpace bear market returns in both percentage and length of time. Yet, if the stock market goes up 0.5% on any given day, you're going to have bears in full force screaming and trying to scare the shit out of you. But realistically, it feels like people are way more focused on avoiding these temporary downtrends than they are focused on profiting from long-term uptrends. So then that begs the question, is your goal account growth or is it avoiding crashes? Pick one. Are you playing to win or playing not to lose? Because to me, it makes no sense playing not to lose in a game where simply buy and holding good assets is a historically backed, easy way to win. If you go back 100 years, history shows time and time again that the thing you should be focused on are the bull markets and being in place for the bull markets and taking even more advantage during the bear markets. You shouldn't be focused on how do I avoid every bear market, because you can really only avoid bear markets in hindsight. And there are risk management tools that you can put in place to protect yourself during downtrends. For example, having a stop loss on the more risk-on sensitive assets or ones that are lower conviction. But bigger picture, buy and holding and accumulating good assets at good prices over the long term has historically done very well. This is how folks have really built massive amounts of wealth. For folks that have been screaming that this is a bubble that's going to pop for years, it is important to understand market history. People always like to talk about the dot-com bubble. Well, let's talk about the dot-com bubble. Fed Chair Alan Greenspan said in December 1996, quote, "Investors are undergoing a bout of irrational exuberance." The S&P 500 was trading at 750 points at that time, and over the next 3 years, the S&P 500 would go from 750 points to 1,500 points, a double. So in other words, the single most powerful force in financial markets, the Federal Reserve Chairman, has little knowledge of when markets are going to top out. So the takeaway here is if he doesn't know, how the hell are you going to know? You also got
I feel the same way. I guess you still have to talk about it though. So, I gotta work on that. All right. All right, let's jump into a little breakdown here. This is a little bit of a more speculative name, for sure. Okay. There is some recent news. Evidence-based policies. States to determine their own legalization laws. Oh my gosh. Okay. Here we go. Significant reductions in opioid prescriptions. That's good. August 6th. Legalization on the 2026 ballot. Trump privately committed to reschedule marijuana multiple times since taking office. Less dangerous. Schedule 3 drug. Okay. There's the ETF. If we look on the 5-year, on the 20-year. Okay. That's not pretty. That starts to look interesting a little bit. I can see comments over on YouTube. Let's get going here. All right. There is one stock about to skyrocket. In my opinion, it's actually an ETF, so it's a basket of stocks. And the reason I think this ETF is a good one to buy right now is it's a marijuana ETF. Now, what happens with marijuana stocks is most of them don't actually become successful companies. I don't know if that's because the leadership, the management that those companies attract are not the most tier 1 folks, or if there are actual regulation challenges that make it extremely difficult to operate these companies. In early August, there was a rumor, just a rumor, that Trump was looking to reclassify marijuana as a Schedule 3 substance, which would ease restrictions and make it more widely available and legal in a large number of states. So naturally, a lot of investors poured into these stocks. I personally don't think you should pick which stock is the right one to jump into. That does not sit well with me as a smart idea. What you can do, though, is you can ride the momentum and you can get into this ETF if you think it's a good idea. The ETF is MSOS. It is the marijuana ETF. And these are the levels and the recent news that may move this thing. Let's get started.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is the ETF, and you can see what I see pretty clearly. I think this was the rumor of the Trump reclassification early August, sent this gapping up, and then it has really not done much during most of September when the market went up, but that is sort of expected given that most of these companies are tiny. This company itself is only $5. This, well, let's take a look at essentially a little bit of press releases about this ETF just to get an idea of what you're dealing with here. This is not like buying the biotech ETF, you know, which looks pretty awesome right now. Actually, just broke out. Like the XLV, the financial ETF, the home builders ETF doesn't look great, but these are examples of other ETFs you might consider at other times. That's not those. This is definitely more speculative. It's $5. I mean, what do you expect? But here's what we're talking about here. If you go back to early August, this is the conversation going on. Trump privately committed to reschedule marijuana multiple times since taking office. CEO says. Okay, so these are kind of examples of why this is about as deep as you want to go into these fundamental rabbit holes. So DEA administrator confirmed by the Senate, says the cannabis rescheduling will be one of his first priorities. That sort of conversation has been going on for years, and if you look at this ETF, it looks horrible. Like, this is not something you want to just jump into and buy. It's basically gone down. I mean, it certainly went up in the euphoria of, you know, when every stock went up in COVID times, but hasn't looked really interesting until just now. So this isn't like a long-term hold or anything, but there's definitely an opportunity here with a higher low where you can risk, in this case, 50 cents or less, and then look for a move into $7, $8 or more, which sort of coincides with this level where it started to really sell off in November. So I'm not going to sit here and say that this is the best ETF to buy. Also, it does, you know, sort of appear that Trump's election was actually not good for marijuana business, or so they thought. Only recently it starts to sound like it might be okay, and that's kind of why this is recovering. Now, before we get totally caught up in, you know, this rumor says this rumor says that, these are the companies that move in lockstep. So if we look at these are always talked about, extremely speculative. Canopy Growth, Aurora as well, and then Cron and Tilray are also always talked about by penny stock investors. So Tilray is the only one that looks like it has some juice to it. I don't think you can buy any of those, including Tilray. It's just way too volatile, and it's just, I mean, moves up, moves back. Yes, it held, but I'm not really seeing that as an opportunity. It's just ugly. So here's the way to buy it. MSOS. And if we look at a little more info about this this ETF, there are other ETFs. POTX is global, but that one's going to be tough. It doesn't even show up on Thinkorswim, but because you won't really get the benefit of any sort of rule changes that roll out in the US. They might not affect that. This is very much a public opinion speculation play, and that's actually okay, because it might not seem like it, but that's basically what most of the market is anyway. So yeah, I do think this news about CBD and news about any sort of medicinal qualities is going to be important, and it is important that this fund, this ETF, this fund portfolio is across states. So you're not concentrated in one state, and now you just have to figure out, is there any sort of big piece of news that's going to get people really scared. Obviously, it looked like Trump's election was a big piece of news, but this Florida sort of reclassification could be major. This is what the Trump rumor was about. Florida is, of course, at the forefront of sort of risky business. And then federal research is also a positive. But that's sort of TBD. Anything that's evidence-based will be good. And that was a while ago. So I don't really think you have to get too caught up in any of these specific initiatives. I do think that this is basically a pure momentum play. And all you really have to take a look at is these are the tickers. And you can see if we look at some of these tickers, and one more that's interesting to keep an eye on is actually MJ, and this is the one that most closely resembles MSOS. You can see that the volume here is basically non-existent. This is a couple 100,000. This is like in the tens of millions of dollars a day. Now, I'm not saying MSOS is a ton, but at least it's in the hundreds of millions, and it resembles that same upwards trajectory with a higher low, with volume coming in, where you can see that money is flowing in, and it's at least a $5 stock, so you get the benefit of an ETF. It has a 9% daily range, so it definitely moves. It's recovering a major key level on news. That key level was breached on what I think to understand the election of Trump, which the news sort of reverses that breach, given that now he seems to be in favor. So that's positive. And I can't believe I'm saying this, but if you view this as sort of a healthcare type investment, that's kind of what this chart resembles. You know, a trial or a piece of information that reverses a previous negative piece of information, you know, a failed trial result or some type of big pharma company not supporting, you know, a company that has a minor investment in or that it receives royalty payments from. So I think the ETF's the way to play it, even though this chart looks more interesting. Well, equally interesting. There's just not enough volume. And none of these penny stocks are all interesting except to say that they do indicate sentiment in the sector. So as little as I want to talk about this sector, it's actually one of the lowest risks, highest reward, momentous opportunities in the market at this particular moment. So this might be the only video made on this in a while, but here it is. And those are the levels up until mid sixes, risk 50 cents, get above this 550 level, and there could be an opportunity there. These candles are very compressed, so pretty interesting. Surfing these moving averages, the moving averages are aligning, and they're also stacked up. So basically stacked up, where the fastest one is above the next fastest one, who's above the next fastest one is above the slower one. So that's when the stock tends to go, and you can see it down here. When they all come together, there can be moves up. Is this pretty choppy? Yeah, this is choppy as heck, but now you have a level of risk off of probably just picking 50 cents is the safest. I mean, you really don't want to hold it below $5. $5 is a very whole dollar number level. This is a very retail driven stock. A lot of people are going to be paying attention to $5. And if we look on an intraday, which I don't love to do, but you can see that if it gets down here, it could go a lot lower. So that's the idea. that's a spot. That's the plan. And I don't think there's going to be a lot of videos about these stocks, but just happens to be under the spotlight right now. If you like ideas of low risk stock opportunities, hit the like button, hit that subscribe if you want to see more. And if you want to get the best idea, head over to stockscommunity.com. You can try it out for $25 for 7 days. You can see a couple of people in there who had some great results when you go to stockscommunity.com. And either way, I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This